accounting for R&D, accounting for research and development. Just want to recap our concepts of capitalization versus expensing. So when you capitalize something, you capitalize a cost. So these are treatment for costs. So for costs, what do? You can capitalize them, which means that you add the cost to the asset, right? So the asset, and then that goes to the balance sheet. Awesome. And that's a good thing, right? Generally speaking, that's a good thing because you want to bolster your assets. And well, it's better than the alternative because what's the alternative? The other one is expensing. So if you expense something, it becomes an expense. And that expense goes to the income statement. So your alternatives here are something that's bad and something that's good. Now, is this really bad? Is this really good? I mean, that's just from the perspective of wanting your financials to look solid. And if you have more assets, that's good. If you have more expenses, that's bad. It is what it is, right? It is what it is. That's just what's going on here. Now, generally, if a cost adds to the value of an asset, then you're going to capitalize it, just like in inventory and in PP&E in those sections where we talked about costs that are specific and necessary to get something ready for its intended use. It gets added to the value of the asset and then goes in the balance sheet. Whereas if it's just a paint job or cleaning something or something that's not really needed or it's not tied to the asset, it gets expensed and goes in the income statement as maintenance expense or R&D expense, which is what we will see here. So research, these are just terms. You don't really have to worry about this, but planned efforts to find out new information to create a project, service, process, technique, or improve one currently used. This is going to be just researching a new medication. As extensive as that, right? Nothing crazy. Development is taking findings from the research and producing a plan to create the desired item or improve an existing one. Awesome. Just little definitions there. Nothing too out of the ordinary. The only acceptable method of accounting for research and development costs is a direct charge to expense with two exceptions. So generally speaking, we are going to expense R&D, right? R&D expense, I mean, that's just a term. Research and development expense, research and development costs. However, we will capitalize because what are our two exceptions? Well, materials, equipment, or facilities that have alternative future uses. You're going to capitalize and depreciate assets over their useful lives, not the project. So if we buy a bunch of machines to research a new medication, those machines, if they have another use, so maybe it's just like a conveyor belt. Conveyor belts have a lot of different uses, and those are going to be capitalized, not expensed, and depreciated, similar to normal equipment, right? That's exception number one. What is our second exception to our rule? Well, if we have R&D costs incurred of any nature undertaken on behalf of others under a contractual arrangement. Let's say the US government hired Microsoft to build them a server farm, lots of computing power. That would be an example here. So the purchaser, who is the US government, will expense as research and development the amount paid. And the provider, which is Microsoft, will expense costs incurred as cost of sales. So this would be cost of goods sold or just cost of sales on the income statement. Conclusion for charging most research and development costs to expense is a result of the high degree of uncertainty of future benefits. So this sentence is basically saying the reason why we expense most of R&D is because we don't really know if there's going to be future benefits. And a lot of times there's not. It's the nature of the beast, right? You don't really know where the value is going to go. Disclosure is required in the financial statements or notes of the amount of R&D charged to expense for the period. Nothing really more to talk about there, just a treatment, accounting treatment. All right, so what are costs that are not considered R&D? These are going to be routine design changes that every once in a while are made to old products, which these are manufacturing costs. Makes sense, right? If we're updating the computers that we're building, if we're HP, we already have an existing computer, right? We have an existing laptop. We're just making routine design changes to keep it fresh, keep it up to date. Marketing and advertising research, these are not R&D, just the treatment for it. And quality control testing, not considered R&D expense.